Welcome to the daily update, where I'll go over the action in the market for Tuesday, October 22nd, and then we'll see how things look for Wednesday, October 23rd. Had another down day. There's some things that are negative, but really, we set the low right at the open and spent the rest of the day clawing our way back. So we still closed down. We tried to go positive a couple of times, but that just wasn't really happening. We're still seeing some high readings with the VIX signals that we have, but they're coming down a bit. Now, that could be quite positive if we can work off these signals without any kind of a significant decline. But that's just where we stand right now. So, for the time being, the market is holding up. And the mega caps, even though there were a few that were up, but it's that they didn't go down so much. They're kind of keeping the market together right now. So it's possible to this point that we are not really seeing an upward thrust. We're not really strong right now. We're getting a few mixed signals, but we could be working this off, being extreme positive and the sentiment positive just by kind of going sideways and chopping a little bit here, chopping there, seeing a little bit of rotation within the market. So that could change at any time. And the big economic report, just like last week, is going to be Thursday this week. So we do have some things coming out on Wednesday, but not anything really all that major. And of course, we have the presidential election getting closer and closer. We're less than 2 weeks now. And the market's kind of starting to price in a Trump victory. I've been showing some graphics over the last few days that this is what will happen if Trump wins. And so they're just kind of gearing up for that. But at the same time, as I've also mentioned, back in 2016, the day before the election, they had pretty much figured on a Hillary victory at about 80% probability, but that ended up working out different. So this is all probability. It's not certainty until it actually happens. There's a thing called the SPXInvesting Program. It's a program that I have. I've developed it. I'll be adding a lot to that, especially in the beginning of 2025. But for right now, it's open, it's free. You're welcome to check that out. You can get to the website by clicking a link below this video. Also, there's another video that will describe more about the program. If you have any questions, you are always free to send me an email. And you do get the videos as soon as they're uploaded. And that's how the videos were designed to be available well before the market opens, and the weekly videos over the weekend, so you have plenty of time to watch them. So feel free to check that out. Also, the daily video, that's where I really focus on things the most. The other videos that I do are meant to supplement into the daily video. All right, so right at the open, we had a lower open. The 10-year yield is really starting to go back up, and that's putting some pressure on things. Europe was not doing all that great, but not terrible either. That was pushing the futures prices down. So we ended up having a lower open. We opened right at S1 at 58.30, but that set the low for the day. And then we chopped higher, kind of bounced all around, but we worked our way higher. We got back to the daily pivot at 58.49, and we actually went positive. We went above the unchanged level, but then we fell back down to the daily pivot. Prices rose back above the unchanged level to try to go positive again, but we drifted right during the last 10 minutes and ended up closing slightly negative. We were down 0.05%, so virtually unchanged. So we have extreme optimism as far as sentiment. We were getting a lot of extreme positive readings with our indicators. There's all kinds of geopolitical things going on and domestic things in the US with the election, and the market is virtually unchanged. So it's been holding up fairly well lately, but that always could change. We just have to go with where we're at right now. We were still below average with volume, and we pretty much have been that way. The only day that was above average with volume was a week ago, Tuesday, when we had a pretty significant down day. Other than that, we've been below average with each trading session. We are still positive in the short, intermediate, long term. We're still above the 20 period moving average. So the trend has been holding up to this point. And the interest rates on the 10-year yield going back up, putting some pressure on stocks. The dollar is really rebounding. That could be pressuring stocks as well. And we're just kind of keeping an eye on inflation, which for right now seems to be under control. But we do have the geopolitical things going on, specifically between Israel and Iran, and then Hezbollah and Hamas. And that, of course, could escalate even more than it already has at any time. The NASDAQ and NASDAQ 100 did close positive. This is the same comment made after Monday's session. So we're seeing a little bit of more holding up with the NASDAQ and NASDAQ 100 for the time being. The VIX is declining, and we're still getting a high reading, but now it's a little bit above 18. Mega caps help prevent further declines. It's not that mega caps were really strong, it's that they didn't see an awful lot of selling. Earnings were met with selling. There's a lot of earnings reports that came out, and for the most part, even though the earnings reports were solid and looked good going into the future, we saw a lot of selling. It's the old buy the rumor, sell the news kind of a thing. And we're keeping an eye on what's going on in the Middle East. Oil is ticking back higher. We had fallen below 70. Now we're getting back above 71. Not a very long list here with our short-term extreme positive indicators with overbought. The Williams percent are the stochastics, and I've added the slope oscillator. We're turning back above that green line, and I'll show you that chart. Not a very long list here in the intermediate term with the PMO studies, the Sean trend meter, even though it's coming down. The bullish percent index also coming down, but still giving us an extreme reading, and the 10-day new highs, new lows for the S&P. That just suggests more intermediate to even somewhat long-term, good, solid, positive momentum. In the long term, we're still above the lines that I put on the chart for the 150 and 200-day simple moving average, which could also suggest that the long-term trend is still looking quite solid. No change with the scenario. We'll have to see if anything comes out. Probably not this week. It's kind of a light week as far as economic reports. We'll have to see. It was last Thursday when we did have a long list of economic reports, and pretty much all of them came in stronger than expected. And then the market's like, uh-oh, maybe the economy's too strong. We better freak out about this. We'll see if something like that happens on Thursday's session. But right now, we have to get through Wednesday's session. The dollar was up and interest rates were also up. We're getting up to 4.2% now with the 10-year yield, where we had been at 4.18%. We're still inverted with the 10 to the 3-month, uninverted with the 10 to the 2-year. Sentiment, we're ticking down. Now, the context of this is we got up to 75 after last Friday. Now we came down to 74. Now we're coming down to 70. So even though it's positive, the context is that it is starting to decline. And we are positive with the trend. With the ADX above its moving average, the green line is still on top, even though it is declining. We're with the slight down day, both in Monday and Tuesday's session, we are negative. I'm still keeping the momentum at positive until we see more conviction to the downside, because we saw that in Monday's session, and I'll go through the intraday chart there, where we started out weak and then saw strength as the day went on, both in Monday and Tuesday's session. Didn't have any economic reports in Tuesday's session. So here's some Isabel Net blog charts. We're coming in at 84.31 right now, and we're up into this kind of higher reading. Now, we've been coming down a little bit with some of our own charts that we're seeing, but this is still a little bit high when we look at the oversold, overbought composite here. But it could still go higher than where it's at right now. And then this is one of those charts where I have to blow up this little small chart just so you can see it. It says 6-week win streaks tend to happen in bull markets. Okay, all right. And here's the blue signals along the way here, and then what the market did after that. So it tends to be positive. And a month later, we're up 61.5% of the time. Not great, but leaning towards the positive side, with the average return of 0.7%. 3 months out, up 75% of the time. 6 months out, up 76.9% of the time. And 12 months out, 86.3% of the time. So the further out you go, when we set a lot of winning streaks together, that tends to lead to more winning streaks after that. The 10 largest stocks in the S&P, of course, you have the Magnificent Seven, the Great Eight, the Illustrious 11. Here they just pick 10. And this is the market cap right now. It's 36% of the stock market. And that's why most of these companies held together, and a few of them, of the big stocks, actually saw a few gains in Tuesday's session, which helped prevented the S&P from declining more than it already did. Sector fund flows, we're still seeing most of the money going into tech. And this is the 10 to the 2-year yield curve. I do have charts of this that I show. This is just a different way of showing that, where we've crossed back over and we're no longer inverted here. We're still watching the 10 to the 3-month. It remains inverted. Rising Trump odds in prediction markets have coincided with higher S&P prices. I mean, he's a businessman. He's also somewhat of a known quantity. He was president for 4 years. So you have to just go back and say, okay, what kinds of things did he do? What was he like? Whether you love him or hate him, at least we know about what, there's a track record there. And there's also a track record with Harris as well, because she's been vice president for the last 3.5 years. So this is one of those elections where we get a little more clarity as to what's happening, no matter which side you come on. But kind of what's become a little more popular, and I show this in the weekly video, I go to a site called predictit.org. I don't think that's one of the ones here. This is Polymarket. Odds of winning are actually starting to increase. Real Clear Politics, that's more of an average that is done. And that's also starting to go back up. And you can see the correlation between that and the S&P. He's a businessman. And he did a lot of things when he was president that really helped the economy and really helped businesses. And the stock market really went up. And then, of course, COVID happened and that crashed everything down. But we kind of V-bounced right out of that. So, but at the same time, it's not as important as a lot of people would think, especially when it applies to the market. I mean, who the president is, they're not driving prices higher or lower. It's really what's Congress doing. But then you could also make an argument with that because Congress is not doing as much as they used to do. A lot of this is being driven by executive orders. And so, gee, that's kind of not what the U.S. was founded to be like. It was supposed to be, we the people, not you the king type of a thing. But anyway, and Trump tends to look at things more in a business type way, where with Harris, it's like, turn the page, change, and all these things, even though if you look at the track record going there, it's a lot different than what she's been saying lately. And that's a lot of people are picking up on that. And that's why we're seeing not the support that we were seeing earlier, right after she came out when she was the media darling. So anyway, still, maybe you've made your decision already. Maybe you're still waiting to make a decision. But the market's going to do what it's going to do no matter who the president is. Now, the rest of the U.S., that's different. I mean, there's a lot of differences there, but we just focus on this mainly for how is this going to impact stocks. What the market would really like is a split between Republican and Democrat in Congress, because then that produces gridlock and fewer things, which means rules and regulations actually end up getting passed. Okay, bond fund flows by category. We're just bank loans, you have TIPS, Treasury inflation protected securities, mortgage-backed securities. So seeing money going into bonds right now, but interest rates are still going back up. So if people are buying bonds, they're actually starting to lose some money because prices going down as interest rates are going up. And this is the composition based on the country. This is the MSCI World Index, where you still have the U.S. making up the major part of that, and then the other countries that are included. Buyback authorization. Now, that has slowed down a little bit. Near the end of this video, I've been showing the blackout period for buybacks, but some companies, at least as of October 11th, are still making a lot of announcements. Doesn't mean they're actually going to do it. They just say, we're planning on doing this. And it's really high because that's it. Companies are figuring that's a good time to buy their stock back. It makes their own books look better, and it actually ends up being positive for stocks. I did find a couple of interesting charts here. Now, the chart on the left, this I did get from Twitter. This is the forward price to sales ratio. Now, when I do the weekly videos, I mainly talk about the PE ratio, price to earnings ratio. And then over on the right, this is the same chart, but this is the Robert Schiller website. Where so you're looking at the same thing. I just wanted to show it in two different ways. Not that there's really a difference here. But this is getting to a pretty high level here now. You notice other times this was right around 2000. We got kind of up there when we were bouncing up in 2020 and 2021. And we're getting to a pretty high reading here. And also, we're getting to a high reading just confirmed by this other chart that we're seeing, which is another way of saying the market could be considered overvalued at this point. And then this is a longer term type of an indicator. This is called the Buffett indicator. Not that he developed it. Apparently, in an interview or something, they asked him, which indicator do you really like? Well, I like the Wilshire 5000, which is a broad market measure to GDP ratio. That really tells you where we're at. And so then they called it the Buffett indicator just because he said he liked it. Getting to a very high reading, meaning that the value of stocks compared to GDP is getting astronomical here, way back higher than where we were at in 2000, and even much higher than where we were in 2007. We did get up to a really high reading back in 2021, and then we went into 2022. Is this going to produce some kind of a concern at some point? All right, here's the intraday chart where we did not much of a gap, but we did come down to S1 here. Tried to drop a little bit below that during the open, but then that set the low for the day. And then we kind of chopped our way back up to the daily pivot. We chopped our way up to the unchanged level. And instead of acting as overhead resistance, which is typical, we actually tried to go positive. And it looked like, okay, maybe things are going to look a little better here. Nope. We fell back down to the daily pivot, which was now acting as support in the short term. And then we tried to climb up off of that, go positive, and then right in the last 10 minutes, that's when things went negative. So the intraday chart, not seeing much of a change now in the initial overnight session, but the futures were showing a little bit of an improvement here right before we opened, but then boom, went down. And then this is where we saw the open for the session, but then the claw back. And we saw a very similar thing in Monday's session where we hit the low pretty much at the open or shortly thereafter, and then spent the rest of the day clawing back. So this is that buy the dip idea, which I personally don't practice, but you can see it happening here. People, they see a stock that they like or an index that they like at a lower price. They think, okay, I can get it at a better price right now. Now, this is positive. We're looking at the intraday chart of growth to value, where the blue line is above the red line now. Now, both going up, at least showing some improvement here with value, but this is turning things a little bit more positive, even though the market has been declining and not really advancing. We did see the blue line cross above the red line intraday, and this is looking better now. Since about the 16th of October, we've been seeing the growth to value ratio for the S&P show some real improvement. End of day, growth was actually up where value was down. Pretty much the same thing, at least up versus down, that we saw on Monday. And for the mid caps, growth was down more. And for the small caps, growth was down more. So a lot of the growth positive things that we're seeing here just have to do with large cap growth, which means the S&P 500. So not much of an improvement here with the small cap growth to value ratio or the mid cap growth to value ratio. And a little bit of a decline here, but holding up a little bit better when we look at S&P growth to value. So with the slant towards the more negative side on both Monday and Tuesday session, this you could take that as this is holding up quite at least better for right now. We are seeing an improvement with this. We look at the growth ETF versus the value ETF. We're actually coming up to the top part of the rainbow. So that could be positive. That could mean some under the surface buying in growth areas that's happening as the market has been a bit under pressure over the last couple of sessions. Discretionary to staples coming down a little bit, but still looking pretty solid when we look at the ratio between the two. Large cap growth still looking pretty good, even though it was down slightly. Our trend, we are seeing the green line coming down. That's a bit of a concern. The ADX is starting to roll over a little bit, but still above its moving average. So we're still in a confirmed positive trend for right now. At some point, though, we want to see price actually make a break to the upside if we're more positive. If we break to the downside, that's really going to turn this over and possibly drop below the moving average. Seeing a little bit more of a rollover in the short term as the green line is also declining. And we're still below average with volume. And this usually is something I go over in the video for Tuesday because it comes out over the weekend, and I do the weekly video at least usually on early in the weekend. But we're getting a little bearish here with the legal insider transaction ratio. This is starting to go up. So this could be a little bit negative. And then what I do when I show that chart, I also show this chart. There's an ETF that focuses on insider buying. Even though it's been chopping more or less sideways for most of 2024, it's still in an uptrend. And we did tick up, or excuse me, it's kind of hard to see this, tick down just a little bit with the VIX, but we're still getting a high reading overall with the line chart as well as the bar chart. We're still above the moving averages here. And the VIX of the VIX also declining with the line chart as well as the bar chart. But the momentum of the VIX is now down as measured by the MACD and the historical chart here. We should be going up more. I mean, we have been going up with the VIX, but this hasn't really been pressuring stocks all that much. And we're coming down. We're right on the dashed line with the VIX to S&P 500 correlation. So I wanted to show this because it's has been generating something for over a week now, and it's coming down. If we could drop below this, that would take this signal away. And that's what I was saying about things being more positive. If we could work off this signal without really much of a decline, that would end up being positive there. And we're coming down, but we're still in the red area here with the skew index as well. And we ticked down just a little bit here with this fear gauge, where we ticked up with the other fear gauge. So seeing some contradiction there. And ticking back up, it's still getting a pretty high reading when we look at volatility risk premium. There's still risk anticipated in the market, which typically will mean downward movement with the index. We went up with the equity put call ratio on the daily chart, and we're starting to, it's really hard to see, but we're starting to tick back up with the 5-day, also ticking up slightly here with the 10-day. That's somewhat negative, but we're just chopping around here. When we get the most use out of these charts is when we see a move one way or the other, not just some ping-ponging up and down here. Advanced decline line, we are seeing a little bit of pullback, but still looking solid with the advanced decline line based on price and volume. And a real decline or drop off in the new highs, a little bit of an expansion in the new lows, but we're still going sideways with the 5-day. And we're flattening to slightly declining here with our 10-day moving average. And working off getting far away from the moving average, as denoted here by the boom indicator, which is really just a modified MACD. But we're still looking positive here. We actually went up with the accumulation distribution, and we're above an advancing moving average. So this is still looking pretty solid. The one thing that I've been pointing out from time to time is if you look up here on the chart, we have this R1 level, and this is providing overhead resistance for the S&P. And we kind of tested that area one or two times, and we've not been able to break above that. If we do see some buying coming in, we'll want to get above this R1 level and end up closing above it as well. And we're seeing a similar thing on the Dow chart, which I'll show you when I get there. We're declining here with the advanced decline ratio, but we're still above zero. This is a little bit of a concern too. The Chaikin money flow, we're seeing the histogram trailing off and the red line going down. Now, after Monday, I pointed out, well, we saw the same reading for Monday as Friday, where Friday was an up day and Monday was a down day, and we were still going down with the red line. So this it's just showing a little bit more weakness. And some of this could be since we're below average with volume. But even though it's still positive, we don't really like how this is going down right now. And we're still going up with the Chaikin oscillator. So this smart money indicator is still looking good. The vortex kind of flattening out, but the green line is still above the red line. And turned down a little bit with the S&P 500 advanced decline line based on price and volume. But you see how we turned down a little bit more based on price, a little bit less based on volume. That could be positive. A little bit more of a decline with the broader market than what we're seeing with the S&P, but not really getting out of line too much with each other. When we look at the NYSE cumulative advanced decline line, we did come down a little bit, but still well above the advancing moving average. Also a decline here, but above an advancing moving average with the regular NYSE advanced decline line, as well as this other NYSE advanced decline line. Coming down a little bit more based on price with the NYSE common stock as well as volume, which could be more positive. The advanced decline line seeing some weakness here, but we're still above the advancing moving averages with all of these different advanced decline line studies. Declining, but still above 50 with those stocks in the S&P above their 20-period moving average. Declining, but still positive with those stocks above their 50-day moving average. Declining with those stocks above their 100-day moving average after coming off an extreme positive reading. And declining, but still positive with those stocks above their 200-day moving average. So this is the pivot point that we're kind of watching out for here. And I just showed that on a previous chart. We want to, if we do see some buying, and if we start to go up, we're going to be watching this level. And then down at the bottom is where we are below average with volume. So declining a little bit, but still hanging in there above 50 with the 20 period, 50 period, and coming down after being extreme with the 200 period moving average study. The Stochn RSI is not extreme positive. It's declining, but still above the midpoint. The Williams percent R is declining also, but still extreme positive. The CCI 14 is no longer extreme, and the CCI 20 is no longer extreme. We're still extreme, but coming down here in the short term, still going up in the intermediate short term, rolling over below the moving average, but still extreme positive in the long short term with the stochastics chart. The force index did decline, but it's still positive. The condition of the 20-period moving average or our short-term trend here, we're coming a little bit below the lines, but so far the lines continue to go up. And we're still above the simple and exponential moving averages based on 20 periods. So we're still looking good in the short term with the trend. Standard deviations, a little bit into the +2 channel here and still holding up for the time being. We actually went up with the balance of power and we're positive there. The condition of the 50-period moving average, just coming down right in between the red line and the blue line. Not really dropping down, but the lines are still going up. The go, no go is still positive with the dark blue bars. We're still kind of going sideways, but we're up near the highest high value here, and that's positive. TTM squeeze continues to decline. It's been doing that for a while now, even as the S&P was going up. So this is really more negative, but it's not really confirming what we're seeing with price. We actually went up a little bit with the ease of movement, and we're still positive there. The Arun is coming down after getting extreme positive, but this is still positive when taken together with the oscillator since we're above zero. And this is a little bit more negative where we have the S&P McClellan oscillator. It dropped below zero after Monday. It continues to be below zero after Tuesday. So we're going down with the summation index based on price and volume. And this is a primary indicator that I use, and that's looking a little more negative. But we have other indicators that are looking positive. So we're seeing a bit of a mix right now. The NYSE McClellan oscillator also further declining below zero. So we're seeing the summation index for the NYSE decline based on price and volume. And we're still positive here, but this is a bit of a concern. We're seeing the Swenlin trading oscillator based on price and volume declining, actually rather severely based on price. But since we're above zero, we treat that as positive, but we're concerned that both of these lines are going down. Momentum still remains positive, even though we're rolling over a bit here based on price, getting close to the moving average, where we're rolling over but not quite at the moving average based on volume. Seeing a bit of a decline here with the PMOs that are rising. The buy signals are going down, and we're just still getting a really solid reading with this above 80, even with the kind of ho-hum days with slight declines that we've seen on Monday and Tuesday. This just means that stocks inside of the S&P as measured by the PMO are still holding up quite well. We continue to be neutral with the Elder's Impulse system for the S&P. We're still positive with the parabolic SAR. And I put this on the list because we're crossing a little bit back above this green line here. And we're trying to turn positive with the slope oscillator, rolling over, but not quite below the moving average with the MACD. So yeah, we're seeing a bit of a rolling over in the intermediate term, where our short-term oscillators are actually looking a little more positive. We're positive with our long-term oscillator, the Trix, and we're still trying to cross above the moving average with the other long-term oscillator, the KST. The Kopek curve still going above its moving average. So momentum is still positive for the most part. Coming down a little bit, but still looking pretty positive here with the Sean trend meter. Actually declining, but still above 50 with the money flow. Ultimate oscillator declining, but still above 50. Declining, but still above the advancing moving average with on-balance volume. And declining a little bit with the RSI 14 and 9, but still above 50 for both. Still above all the plotted moving averages on this chart. We saw a little bit more of a decline than what we've seen before here with the bullish percent index. Still positive since we're above 70, but we have to look at the context. If we see more weakness here, that's going to turn us more negative. Coming down after giving us a very high reading with the NYSE bullish percent index, and we declined, but still positive with the NASDAQ 100 bullish percent index. I'm not showing the support or resistance chart right now because we're way above that. Looking a little more negative here with the Heiken Ashi, we see the black candles for right now, and we're positive but pointing down with the Kegi chart. The Renko chart, though, still has the open blocks going up, so that's positive, and the three-line break chart for right now is still positive. In the long term, coming down with the 150 and 200-day moving averages, but still above these red lines that I have on here. And we switched to a downtrend now with the small caps in the short term, where all of the other indexes that we look at are still positive across the board and across all time frames. And as far, oh, here, we look at the different markets where we're negative with bonds in the short and intermediate term. We've switched over to positive with commodities in the short and intermediate term and negative in the long term, where the dollar just been screaming higher, going up in the short and intermediate term. And only saw 4 sectors that were up: staples, energy, real estate, and communication. All of the other sectors were down, with industrials leading the way lower. Saw some negative signals right after the market opened, but Canada still seems to be doing well. The Dow got back above 43,000 and the NASDAQ got above 18,600. And the equal weight to regular S&P 500 just coming down, seeing a little bit more weakness with the broader market than what we saw with the S&P itself. And this is the other pivot point right here. The Dow has hit this 3-4 times now and has not been able to break above this pivot point. And we're seeing a very similar thing, even though we haven't hit it as much with the S&P. We're seeing this pivot point providing overhead resistance there too. The diamonds continue to be neutral for the Elder's Impulse system. The NASDAQ actually finished up, but not really breaking out to the upside. NASDAQ 100 was also up barely, but pretty much chopping sideways. We're still positive with the Qs when looking at the Elder's Impulse system. We're right on top of the moving average with the momentum of the NASDAQ 100. And of course, since we had some up days with the small caps, now we have to see a lot of that given back as they've been under pressure. And we've gone from neutral to negative with the small caps with the Elder's Impulse system. When we look at the Russell 2000 small caps, we're pretty much still right at this 50 level with the RSI, still above the 50-day moving average, but the momentum is starting to roll over, but it hasn't quite crossed negative yet. Mid caps also seeing some more weakness here, down 0.2%. And they've gone from neutral to negative with the mid caps when looking at the Elder's Impulse system. The Wilshire just kind of chopping along sideways, but not seeing an awful lot of weakness. Also, just coming off of a recent all-time high with the total US stock ETF. Just kind of chopping around here with the staples to tech ratio. We are going down, but the trend for this ratio is up, and that's more negative. But when this ratio goes down, that's more positive, meaning tech is outperforming. And seeing a little bit of a pullback here with the financial sector, which has been really strong lately. The FANG index was up, it still has a ways to go to get back to its all-time high. And I brought this up after not showing it for a few videos. We're in between. We're below this we're above this longer term trend line. We're still below the shorter term trend line. Apple was down about 0.25%, still looking pretty solid, where Amazon was up 0.33%. And Microsoft was able to, so far, been able to bounce off of its 200-day moving average. We've been watching this to see if there's a death cross happening. Hasn't happened yet. And then it was up over 2%. And that's what helped keep the market together. Google was up 0.65%, also helped keep the S&P 500 together. And Meta was up 1.19%. Nvidia was virtually unchanged on the day, but still looking pretty solid. Tesla was down 0.4%, still below its 50-day moving average. Netflix, after we shot up and then we gained 1% on Monday, well, we gave that 1% back on Tuesday. And then looking at US stocks versus world stocks, really seeing a drop off here as the short-term correlation is weakening, and we're seeing the longer-term correlation also weaken. Because you can see where the world stocks, they're seeing more weakness now. So they're going down as the S&P's been holding up a little bit better, even though it's been declining lately. And that's why we're seeing this short and long-term correlation show more deterioration. Oil's climbing back above 70. We closed at 71.74. And the dollar, even though it's in a downtrend, is measured by these moving averages here. We've just been screaming. We're into the 104 area now with the dollar. And we're going up with the 10-year yield. We're crossing back above the 200-day moving average. And we look at the 10-year based on price, we are declining. We haven't come down to its 200-day moving average yet, but the momentum continues to be down. And then looking at our growth to value ratios, just coming up a little bit above the moving average with the Qs to S&P. Discretionary to S&P is showing some more weakness after it had been looking better. But when we compare large cap growth to large cap value, we are seeing an improvement there. And with the large caps, we're above the moving average. We saw a bit of an improvement with the mid caps, and we're still above the moving average with the small caps. We're still having a tendency to decline overall, even though it ticked up a little bit. The S&P to utilities ratio just kind of chopping around right now. But this is more positive for the S&P. The staples to S&P ratio is continuing to go down overall, even though it was up slightly on Tuesday. So what's our outlook for Wednesday? We're still positive, but for right now, it just looks like we're pulling back. Just some profit taking, some consolidation. We haven't really switched over negative. There are some things that we're going to keep an eye on to see if they turn more negative. But as of right now, we're still looking positive. We have this confirmed Hindenburg omen in the background. The VIX signals are declining, but they're still there. So we want to pay attention to those. And then we're going to get earnings from Boeing, Tesla, and UPS. We're going to get lots of earnings. These are just the bigger names that maybe you've heard of. We're going to get the MBNA Mortgage Applications Index and existing home sales in Wednesday's session, and all the different crazy stuff going on in the world. Just keeping an eye on all of that to see if it has an impact. So then on Thursday, that's when we're going to get jobless claims, and we're going to get the global manufacturing and services PMIs as well. Then on Friday will be durable goods and consumer sentiment. And so we have existing home sales, which is deemed important in Wednesday's session. Thursday is going to be the bigger day here. Seasonality, we're actually positive just over the last 21 years or so with the Dow, S&P, and NASDAQ looking pretty solid for October 23rd. This is still the week after options expiration, where we tend to be down more than up. But when you just break it out based on an election year, we have some negative seasonality that we're dealing with. We've kind of started that. And pretty much here's Monday, Tuesday, Wednesday. We still have a few more days if we stick to the same seasonal pattern. So if you take it over the last 20 to 21 years, we're looking good. If you just break out the data based on an election year, we're not looking all that good. So Wednesday tends to be the most negative day, at least compared to what happened in 2023, where it was actually better performing so far in 2024. And this is the blackout period for stocks they're reporting their earnings, so they can't come in and buy their own stock. Still getting a pretty high reading right here, which may lack some support in the market. So the warning signs, we still have the Hindenburg Omen, which I stopped showing the chart for right now because it's just not changing. I'll show that if something does change. We're keeping an eye on the more defensive areas, but we've been doing this for 2 or 3 months now, and the market's still been holding up. When we look at staples and utilities as well as healthcare, mainly we're watching energy for geopolitical reasons, and we're back to going up slightly. They're just ticking around a little bit with our 5-day and 10-day equity put call ratios. We're turning a little bit more negative with the S&P and NYSE McClellan oscillators and summation index, and that's kind of a concern there. We're keeping an eye on growth of value, which so far has been holding up. Discretionary to staples, not doing so much. When we compare discretionary to staples, we're doing okay, but discretionary to the S&P, not as much. And then we're still keeping an eye on these VIX signals that have been up for over a week now. And it's right on top of the moving average when we look at the momentum for the NASDAQ 100. Positive side, we're still looking positive with our three smart money indicators, accumulation, distribution. Chaikin money flow is a bit of a concern because it's declining. But the Chaikin oscillator is now starting to go back up. Advanced decline line still looking pretty good. The momentum is still looking pretty good for the S&P. We're still extreme, even though we declined with the bullish percent index for the S&P. We declined with the NASDAQ 100 as well as the NYSE, but they're all still positive. Parabolic SAR is positive. The Vortex is positive. The Swenlin trading oscillator, it's positive because it's above zero, but we're declining based on price and volume. Money flow, ease of movement, and ultimate oscillators are all positive, and the financial sector is positive. So our conclusion, we're positive, but for right now, just like I said after Monday, we're just pulling back at this point, but we want to keep an eye on these VIX signals. In the short term, it does look like we're just pulling back. If we do see more weakness, we'll be watching the 20-period moving average, but we're still not really that close to it right now. In the intermediate term, we're also positive. This is where we have the Hindenburg Omen and the VIX signals, which may come into play, or they may work themselves off. And in the intermediate term, we continue to be positive. Thank you. I hope you have a really good day, and I will talk to you in the next video.